Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks rise after weak U.S. retail sales enforced bets on a Fed rate cut later this year. Traders closely watching for payroll revisions due later today. Israeli Prime Minister Benjamin Netanyahu is set to meet the U.S. president in Washington later today as Donald Trump says Iran is keen on a deal. Plus, we speak to the CEO of AirAsia as the carrier looks to expand its global footprint. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Versace back in Dubai today. Let's talk you through some of the market price action yesterday because we did get surprisingly weaker than expected U.S. retail sales. So it speaks to some of the softness in the U.S. consumer momentum as we head into the latter months of the year. And on the back of that, we saw markets once more pricing in. Well, right now we're sitting at around 30% chance of 75 basis points rate cuts throughout the course of 2026. We did see quite a significant rally in 10-year U.S. Treasuries as well. They're at the lows not seen for the last couple of months now. U.S. Treasuries are closed for trading because it's a Japan holiday, but I just wanted to mark that. Right now, you've got S&P futures leaning towards positive, up 0.3%. And of course, the next big events to watch out for, we've got jobs data today, so that has been largely delayed because of the shutdown. The expectation is that we're going to get a 65,000 headline print. That's a positive number, and that the unemployment rates will hold steady at around 4.4%. But of course, any massive deviation from that could have a big impact on the market. So that's one driver to watch out for. And then Friday as well, we get CPI numbers. So a lot still happening in the U.S. with the backdrop, of course, of earnings still going on. The USD is slipping once again this morning, down 0.2%. Over the course of the last month, we're down about 2.5%. And then gold holding steady around $5,000, $5,050, still shy of those all-time record highs we reached last month of close to 5,600. But the point here is as investors price in perhaps the possibility of more easing, that is giving a bit of a boost to gold, which benefits from a lower interest rate environment. So that's the story today for gold. And then Brent just shy of $70 this morning, up 0.6%, around $69. And there we're keeping a close eye once again on the geopolitical situation. We did have a massive U.S. inventory buildup yesterday. The numbers came through, but the markets mostly dismissed that. Real focus is on the Trump-Netanyahu meeting today, in addition to some talks that, some reports that the U.S. was considering seizing tankers that are carrying Iranian crude. So still a lot of tensions in this part of the world as well. Flipping over, I thought something else that we were discussing yesterday. We were talking about Alphabet and the fact that they came to the market with such a significant issuance. $20 billion in U.S., about $32 billion in total, because they also issued in sterling and Swiss francs. And of course, it's not just Alphabet. We had Oracle, we had Meta as well come to the market. And here, what it's showing is that the tech sector, in terms of spreads, is trading at a slight premium to the rest of the IG basket. So you can see that basically that's on back of all of the supply that's hit the market because all of these hyperscalers are coming to the market with these bond issuance programs. They're quite substantial, very heavily oversubscribed, I should say. But still, the supply is putting pressure on the space. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. And Min Min, we did get a data drop out of China today.
Yes, we did. And overall, Asia markets doing really well today. In fact, MXAP hitting a record high. Japan is closed for a holiday, but it looks like ahead of the jobs report and also after the retail sales number in the U.S., there has been, bets that maybe the Fed will continue cutting rates, and that is helping to lift Asian stocks. Take a look at the TAIEX up by 1.8%. That's after the blowout January sales from TSMC. You have BofA, Bank of America, raising the GDP forecast for Taiwan to 8%. Really impressive revision there. The Kospi as well. Samsung touting its latest HBM4 chips, the latest high bandwidth memory chips that will be going into production, I believe, as early as this month. But yes, CSI 300 under pressure because of that inflation miss coming in less, missing expectations. And if you flip the board, you look at the market action in China, it looks like investors are really rotating into safer areas of the market, because here you can see the increase in Chinese bond future positions hitting a record high. And we did see the 10-year yield breaking below 1.8% now. That's after the PPI improved, but really doesn't really tell us about improvement in underlying demand because a lot of it has been supported by the increase in commodity prices. So again, overall, you look at both the CPI and PPI. CPI coming in at 0.2%, a big disappointment there. Overall, it doesn't look like prices are increasing in China very much.
Min Min, thank you so much. Min Min Lo in Hong Kong. Now, for more market insights, joining us now, Bank of Singapore's chief economist, Mansoor Mohi-uddin, in the studio. Really good to have you here in Dubai. Let's talk about the upcoming jobs print today. It's going to be a big one for the markets. Do you think it's going to determine whether we get another cut out of the Fed before the end of the current chair's term in May?
Yeah, thanks very much, Giovanna. I do think that the payrolls numbers could be very important because we saw from the reaction yesterday to the retail sales number, the markets are looking for signs of weakness for the Fed then to resume rate cuts.
Yeah.
So the payrolls number, if the number shows a contraction in jobs, or as you said earlier, if unemployment starts to rise above, say, 4.5%, then the chances of a near-term rate cut would increase. But for the time being, we still think that Chairman Powell probably wants to keep interest rates where they are before he leaves in May.
Yeah, you had Fed policymaker Beth Hammack yesterday speak about the fact that rates are likely to stay where they are for a period of time. Where did the inflation figures come into this? We also have CPI numbers to watch out for on Friday.
That's right, yeah. So the inflation numbers are likely to make life harder for the Fed. So the core inflation number is probably going to stay above 2.5%, so above the Fed's 2% target. So even if the unemployment numbers are poor today, the inflation numbers are sticky. A lot of the FOMC are still going to want to keep interest rates where they are. Now, for Powell, he's got 2 meetings left. He probably will just want to then pause the rate decisions until his successor, Kevin Warsh, comes in.
Yeah. How do you see the evolution of the U.S. economy this year? I mean, again, I remember last year we spent so much time discussing the possibility of a recession, and then the U.S. economy was growing, putting in growth rates of more than 4% in the last quarter. So how do you see the momentum changing this year?
So the U.S. economy has been, as you say, surprisingly resilient. If we met last year, we had the discussion of all the trade wars and all the shocks.
Exactly. Yeah.
You'd have thought recession would be much more likely. And actually, all the major economies have been resilient. So for this year, the U.S. economy, we think, will still avoid a recession. Growth will be strong. The problem is the labour market has been quite soft. Now, we have President Trump, who's very keen to cut interest rates. So for the Fed, they have to look at the labour market to see whether that softness is going to become more structural. Let's say the AI boom does result in a lot more job cuts. It's not our view. We think that eventually strong growth in the US will pull the labour market back up. If we're right, then it's really up to Kevin Warsh then to make the case for rate cuts.
It was interesting yesterday, Treasury Secretary Scott Bessent explicitly referred to China's $1 trillion trade surplus, which is a record for any country that was reached in 2025. How do you see the dynamics from the China perspective? And again, authorities trying to do a bit more perhaps targeted easing there to boost the economy and the ramifications that it could have on the broader Asia region.
So definitely the trade surplus in China has been extremely strong, as you say. It's been quite impressive that despite US tariffs, China is able to post such a large trade surplus. Now, that will continue this year. The export engine is doing very well. The problem for China is that while supply is strong, demand is weak. Property is down. Consumers are pretty lackluster after the pandemic. So there will be more easing from the People's Bank of China and some more fiscal stimulus this year. But the government doesn't want to cause the economy to overheat again in China. So they'll try and rebalance supply and demand. That will be good for Asia, it'll be good for global growth, good for commodities, for example, stock markets. But it's not going to reignite a very strong boom in growth. The difference, though, is that because we're seeing the dollar weakening and global investors are shifting away from the US, China's markets and Asia's markets are doing well despite the fact that the Chinese economy is not super strong.
Yeah.
It's fine, it's firm, but markets are dislocating from the fundamentals for good reasons. There's a lot of liquidity coming to the region, which will help Asian markets pick up.
Do you expect that dollar weakness to continue then, and as a knock-on effect to that for the performance, this outperformance of Asian indices to continue?
Yeah, we think the dollar is in a clear long-term downtrend now. So what the situation reminds me of is what we had in the early 2000s, when again we had a lot of geopolitical tension with the US administration and the Iraq war. The dollar is falling, The Fed had interest rates relatively low. But stock markets boomed around the world, in the US and emerging markets and Europe. Commodity prices went up, gold went up. The same dynamic is going to happen now. People are going to reassess their US exposures. It's always going to keep on weakening for the next few years. That will help the region. It will help all global markets as well.
Yeah, well, what is the alternative to the USD, though?
So for a large reserve manager, there is no real alternative. But because most investors are overweight dollars, they can shift into euros, into yen, into Australian dollars, Singapore dollars.
Yeah, really good to chat to you. Thank you so much for coming on. Bank of Singapore Chief Economist Mansoor Mohi-uddin. Well, coming up, AirAsia is expanding its global footprint, deepening its presence in the Middle East. We'll speak to Tony Fernandes, CEO of Capital A, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, AirAsia is expanding its global footprint. The airline is launching new international routes linking Kuala Lumpur to Bahrain and onward to London Gatwick. The move establishes Bahrain as the airline's first strategic hub to Europe, marking a significant step in its push to grow beyond Asia and strengthen connectivity between Southeast Asia and the Middle East and Europe. So for more, we're joined by Tony Fernandes, CEO of AirAsia's parent company, Capital A. Tony, really good to be with you. I guess the obvious question is, why Bahrain? What sort of demand are you envisaging out of passengers there?
Well, I think we saw, first of all, Bahrain is centrally located in the world, so it gives us a great opportunity to grow into Africa and Europe. Second was that Bahrain was really keen to work with us and understood our model, which was critical. We're now trying to do something very different, which is create the first low-cost network airline, combining our resources of AirAsia X and AirAsia. So those are the two things, and we think there's an aggressive development plan in Bahrain that wants to grow its tourism market, wants to grow its MICE market. So all the stars aligned for us to be building the strategic hub in Bahrain.
Okay, great. So let me just ask you about the potential for that strategic hub. What does it also mean in terms of obtaining a license to operate there?
Well, I think that was another key consideration. The Bahrain government was very open to us setting up our own airline here, but in the interim, giving us fifth, seventh freedom rights to operate. So stage one is using the air traffic rights, fifth and seventh freedom. And then stage two would be to look at building an AirAsia Bahrain here to really tap the huge potential markets in Africa and Europe.
Okay. Do you have plans to open any other hubs, or have the conversations sort of centered around Bahrain for the time being because of the reasons that you just listed?
Yeah, we discussed with many. But we've set our sights on Bahrain, and I think that will be where we set our home in the Middle East for the immediate future. It's really find the government very, very proactive, and it really ticks all our boxes here.
Yeah, and talk to me about, this specific route is Kuala Lumpur to Bahrain to London. Do you have any other routes planned for 2026?
Yes, I mean, we'll be doing quite a few. I don't want to steal the thunder, but I think the next route I can announce will be there'll be a route coming in from Bangkok through here. The future with our fleet plan, we have 347 A321s of various length in terms of the Neo, the long range, and the XLR. And we're closing in on another order of planes. And so the potential for the Bahrain hub can be very, very large. And connecting, no low-cost carrier has really connected Asia with Europe and Africa. We have a phenomenal network in Asia. And putting that together with what we want to build in Bahrain could be very exciting. I mean, we're trying to emulate what's been done in the full-service carrier by Qatar and Emirates, who I think have done an incredible job. But most low-cost carriers have been focused around their own region or domestic markets. But we see a massive opportunity here with the fleet that Airbus have given us, the type of planes, and with the experience that we've built from AirAsia X.
Could you give us some more color on perhaps how many aircraft you're eventually planning on situating in this planned Bahrain hub?
Yeah, I mean, if you look at what we've done in Thailand and Indonesia and Philippines, the potential of up to 100 aircraft in Bahrain is there. The potential of up to 45 million passengers is there. Talk is cheap. We'll have to implement it. But our record up to this point has been good in terms of developing new flows of traffic. We're now focusing on our costs. We've come out of a very tough period in COVID. And actually, just to say, Capital A now is a minor shareholder in AirAsia X. AirAsia X, which will soon be renamed AirAsia Group, is combining all our airlines and will be merging AirAsia X and airline into one airline. And so the potential is very large. And we have the order book to do that in terms of the initial 321 order book, and we're finalizing another large order in the next month.
Yeah. So we actually, at full disclosure, we've got the Dubai Airport CEO later coming on our show today, and they've had yet another record-breaking year in terms of passenger flow. And my question to you, and I'm also going to put this question to him as well, is there was a lot of, and still is, a lot of geopolitical tension, noise in the region. We talk about flights being disrupted, rerouted. What is your level of concern about the geopolitical outlook, given that you're now becoming a lot more entrenched in this region?
Yeah, obviously there's a concern, but I think common sense will prevail. But we're not here talking about 1 week or 2 weeks. We're talking about a 10 to 20-year vision here. And so our outlook is that things will only get better in the Middle East. And but one thing can't change: the geography of the Middle East is very, very enticing. You're right in the middle of Asia, Africa, and Europe. And so that is what really drives us, coupled with a government that's very pro-business and very easy to work with, and a great lot of people here. And our relationship isn't just going to be about the airline. We're looking today, actually, we launched our first cargo flight, 747 on Teleport, which recently raised capital. And also, we're looking at ADE, our engineering company, building a maintenance hub here. So it's quite a deep relationship we're looking with Bahrain.
All right, Tony, thank you so much for joining us to discuss CEO of Capital A, the parent company of AirAsia. And coming up, Israel's Prime Minister Benjamin Netanyahu is set to meet U.S. President Donald Trump to discuss the situation with Iran. We are live in Jerusalem next with all the details. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Israeli Prime Minister Benjamin Netanyahu is set to meet U.S. President Donald Trump later today. Netanyahu says he will discuss Iran, Gaza, and other regional issues with the U.S. president during his visit to Washington. The U.S. and Iran have so far struck a positive tone about the start of diplomatic talks. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Well, Dan, this feels like a pretty hastily arranged visit, and certainly not the first time that the Israeli Prime Minister has flown to D.C. to meet with President Trump. What is top of mind for Netanyahu here? What does he want to achieve out of this visit?
Well, indeed, there have been half a dozen of these trips in this Trump administration. Netanyahu is something of a frequent visitor and traveler to the White House. But this was arranged with really extraordinary speed, as you noted. It appears that even though we've had a new crisis around Iran evolving for a month now since that bloody crackdown by the Iranian authorities against protesters in mid-January, that prompted a U.S. mobilization, a dramatic mobilization of U.S. forces, threats by Trump against the regime in Iran. Now it appears there's some question about what, if anything, he intends to do. The Israelis appear concerned by the messaging for the president, messaging that would appear to be focused exclusively on the Iranian nuclear program, caps that he would demand from Iran on its nuclear program in exchange for backing down those U.S. forces and backing away from the threat of military force, potentially to topple that regime. The Israelis see an opportunity here to effect a dramatic change in the country they deem their main enemy in the region. They want any caps by the Iranians to include their ballistic missile program, also an end to their support for groups like Hamas, Hezbollah, the Houthis of Yemen, groups which Israel has been battling over the last 2.5 years, or at least since that ceasefire in Gaza back in October. So it appears the Israelis want a course correction, or at least a closing of ranks with their main ally. There's a real rapport between these two leaders, as we've seen before. So I think Netanyahu wants to come away with from this hasty meeting with a sense that he and Trump see very much eye to eye on a deal that could emerge very soon with the Iranians.
Yeah, both sides have described the first round of talks as constructive, but as you say, we don't have a lot of detail around the contours of what they're going to agree to. But let's also not forget that in a week's time, Trump is planning on convening the first meeting around this so-called Board of Peace for Gaza. Is that also going to come up in conversations?
Certainly will. It's worth remembering that if Netanyahu is now in Washington, there's a big question over whether he would return a week from now for that convention of the Board of Peace members, a donor meeting effectively to discuss who will fund Trump's very ambitious peaceful vision for a post-war Gaza Strip. So Netanyahu may want to cover some of that ground with Trump already during this meeting. In fact, he may see this meeting as an opportunity not to attend that meeting next week in Washington. There are arguably the reasons for him to stay away, namely the expected presence of the Turkish leader, of the Qatari leader. These are countries that have been unfriendly toward Israel, with which Israel has had very tense ties in recent months and years. It could be Netanyahu is not ready to share a stage or a table with them at this point, especially as there are open questions over their active participation in Gaza in the post-war stabilization force envisaged by Trump's plan.
Bloomberg's Dan Williams in Jerusalem, thank you so much for bringing us a preview of that Trump-Netanyahu meeting that's taking place later today. Well, a quick look at markets to see how they're faring. We are building off a negative session for Wall Street yesterday, but the focus is going to be on jobs data this afternoon. S&P futures up 0.3%, the Nasdaq up 0.4% as well. Now, coming up, sticking with the airports theme, we will be speaking to the CEO of Dubai Airports as it records its busiest year yet. More on the travel trends and expectations for the year ahead. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks rise after weak U.S. retail sales reinforce bets on a Fed rate cut later this year. Traders closely watching for payroll revisions due later today. Israeli Prime Minister Benjamin Netanyahu is set to meet the U.S. President in Washington later today, as Donald Trump says Iran is keen on a deal. And we speak to the Ooredoo Group CEO Aziz Aluthman Fakhroo as the Qatari telco reports a 4.6% jump in full-year EBITDA. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. The markets today leaning towards positive. Handover from Asia also pretty positive as well, up 0.3%. Weak retail sales numbers yesterday driving traders to price in the possibility of perhaps more easing out of the Fed this year. A big rally in U.S. Treasuries. We're down at around 413. Closed for trade today, which is why I don't have them up here. Closed for trade specifically for the Japan holiday, I should say. They will be resuming trading later. And then the big event is going to be the jobs report. It is delayed, obviously, due to the short shutdown that we had in the U.S. The expectation is for a headline figure of 65,000 jobs created and for the unemployment rate to hold at around 4.4%. But again, any meaningful deviation, particularly to the downside, will again catalyze calls for further interest rate cuts this year. The dollar slipping a little bit today in trade, down 0.3%. Gold also higher, 0.6. We are stabilizing around this $5,000 mark. Of course, it's been a massively volatile couple of weeks for gold, but any talk of further easing, lower interest rate environment benefits the precious metals. So that's where we are today. And then oil just shy of $70. We did have a big U.S. inventory stockpile figures that came through yesterday, but the big focus is going to be on the geopolitics of the region. And of course, we're not out of the neck of the woods, I should say, when it comes to Iran, U.S. and the real possibility at some point of there being a military action. So that's still being priced in to oil. And then switching over, I quite like this chart today. And just to really highlight the fact that there's been so much corporate issuance out of these big tech names, the hyperscalers who have these massive capex spending plans on data centers. Yesterday, we saw Alphabet come to the market. They issued $20 billion in USD, about $32 billion across other currencies. So in total, they issued in Swiss franc and in the pound as well. Very heavily oversubscribed. That is on the back of Oracle, Meta also coming to the market. And essentially what this is showing you is that the tech IG sector is trading at a premium to the rest of the investment grade space. And that is purely a function of the sheer amount of supply that has hit this market. So a bit of a micro observation, but I think it's noteworthy, especially in the context of how much supply has already come to the market in the first month of this year, 2026. Okay, speaking of, let's move on and talk about how markets in Asia are faring. Min Lo is with us in Hong Kong. And earlier on, we were talking about some of the less deflationary data than was expected coming through from China today.
Yes. I will show you the inflation table later on, but here we're taking a look at the FX market in Asia. You can see that the yuan is pretty flat today, 690 against the dollar. We know that many investors have been very bullish against on the yuan, but the PBOC has said it wants to maintain a reasonable and balanced exchange rate and guard against any overshooting. So some economists like Morgan Stanley's Robin Singh, I spoke to him earlier, he's still forecasting that yuan will stay at about 7 per dollar this year. Certainly a bit of a contrarian view there, but the Aussie dollar is getting today 0.5% higher. That's after the RBA emphasized that inflation is still too hot and raising bets that the rate hike trajectory is still going to come through. So the Aussie is gaining, but the yen as well also in focus. We have Japanese markets closed today, but still we are seeing the yen gaining against the US dollar, against the euro, against G10 currencies, and there has been surprising resilience to the yen despite that election win, right, and the Takaichi impact. And some are saying that the election is turning out to be an inflection point because despite the stronger yen, we're still seeing Nikkei futures pointing to the upside. So that correlation between the weak yen and a stronger stock market seems to be collapsing right now. So something to keep tracking. But flip the ball, we take a look at China, right? We got the inflation data, 0.2%, much worse than what it was the previous month, 0.8%. So a strong pullback there. PPI improved, down by 1.4%, improved from the previous month, but still a lot of this is driven by commodity prices, especially copper, which has tripled or quadrupled in the past few months. So overall, not a very strong picture when it comes to price data in China.
The context important there. Min Lo in Hong Kong, thank you so much. Well, more than 95 million travelers arrived at Dubai Airport in 2025. That is up 3.1% year-on-year, making it the busiest year in the airport's history. Joining us now, the CEO of Dubai Airports, Paul Griffiths, joins us. Good to have you with us. So another record-breaking year for Dubai Airports. Those numbers, again, showing growth from 2024. And then for 2026, you're forecasting 99.5 million. Where is this extra growth coming from, Paul?
Well, we're very fortunate that the resilience of the Dubai Intercontinental Hub continues to power us right up in the ranks now. We're entering our 12th year shortly as the world's largest international airport. We've just overtaken Atlanta in terms of total seats offered. And I think the sheer scale of the operation we have here in Dubai is really testament to the fact that we've got these huge numbers. We now have 108 international airlines serving the hub from 110 different countries, and we're now able to offer 291 destinations globally. The top country markets being India, 11.9 million during the course of the last year, 7.5 million travelers between KSA and Dubai, 6.3 million between the UK, Pakistan, 4.3, and the US market, 3.3 million. So it's been a very, very busy year for us, and breaking almost every record that we've known up to date.
Are there any geographies that stand out in terms of growth specifically for 2025?
Well, we've been very fortunate to have a real resurgence from the Chinese market, something like 2.5 million customers during the course of 2025, which is more than 11% growth over the previous year. So that's been very, very fortunate for us to have that resurgence. Turkey, 2.2 million, 7% growth, and Egypt, 14.3% growth. So some pretty good growth in the region as well. We're seeing new destinations, and of course the airport at DWC is continuing to grow. We had something like 30.3% growth last year, 1.4 million passengers. And of course, our major project is to build not just once, but twice the world's largest airport with the new project launched at DWC, Al Maktoum International. That project is expected to complete by the end of 2032, and we'll see the transition from DXB to DWC in that year when we've got to something like 115 million passengers.
Okay, so you actually anticipated my question. I was going to ask you at what point that transition takes place. So once we get to 115, then we transition to the new airport. Initially, let me just ask you about numbers here. I think the initial figures that I've seen around the expansion is something around $30 billion. Are we still in that ballpark? Is that the funding that has been dedicated towards the expansion? And if that is the case, where is the funding coming from?
Yes, that's the sort of order that we're talking about. I mean, we've had great confidence. We've got 10% of that budget pledged from the UK with UK export finance and expertise. We're expecting more finance to come in from various international sectors. The interest in the infrastructure sector in the Middle East generally has been extremely positive. And I think, as the economic center for infrastructure investment is definitely shifting towards the region, that's, I think, building confidence. And I think, the growth figures we've got in the traffic numbers suggest that investment is going to be very well placed. We've got about another 20 million of growth at DXB before we are completely exhausted our available capacity. So the 150 million that we'll have available at the initial phase of DWC phase 2 will be enough to fuel the growth until we get to a maximum capacity by 2057 of about 260 million total. So really, really confident and far-reaching expansion programs and actually happening as a reality right as we speak.
Well, Paul, given the Dubai airports are doing so well, is it time for a liquidity event? I think lots of people are asking whether it may be the right timing to go to the market for an IPO.
I think every time I talk on Bloomberg, this question comes up. And I think the question's the same. Obviously, airports are an incredibly attractive subject for IPO and valuation in the public markets. But, we're a government entity. It is up to the government to decide whether and when an appropriate offering might be there. But so far, it's completely up to them to decide the answer to that particular question.
Okay, fair enough. And I appreciate you responding to all of our questions here at Bloomberg. And congratulations on another very strong year for Dubai Airports. Dubai Airport CEO Paul Griffiths. Well, coming up, we speak to the CEO of Qatari telco Ooredoo as he reports full-year earnings. That conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Qatari telecoms provider Ooredoo has reported full-year EBITDA of 10.5 billion riyals. That's a jump of 4.6% year-on-year. Meanwhile, net income came in slightly below estimates at 3.9 billion riyals. Joining us now is Ooredoo Group CEO Aziz Aluthman Fakhroo. Good to have you with us. So talk us through some of the drivers of the momentum behind the earnings this year.
Well, thank you for having me. And again, it's a pleasure to be here, especially on the back of the strong results we're announcing. As you mentioned, this is third record year in a row for us. So I think it proves the solidity of our strategy. We've delivered nearly 5% growth on EBITDA, 6% growth on the top line, and a full 12% growth in terms of net profit, just 3.9 billion Qatari riyals. And this also translates to our shareholder with an increase in dividends by a full 15% at 0.75 dirhams per shares, which are all record metrics in the history of the group. And these are not one horse's pony. We've been doing this year after year now. So we're very proud of our results, our discipline, and I think our strategy is paying off.
Yeah. Okay. So let me ask you, globally, traditional telecom revenues have been under pressure. Where are you seeing real pricing power in this environment?
I think this is the exceptional mix of Ooredoo. We have three core markets in the GCC, which provides very strong foundational stability, and this is Qatar, Oman, and Kuwait. These are much more mature markets, reasonable growth in the single digits, but with very robust underlying economies, pegged currencies. And we also have our growth engines, which lie within Iraq, Algeria, Tunisia, and Indonesia, which all of these markets have been growing in the mid-teen. And these are really the driver of growth for Ooredoo going forward.
You've been reshaping the portfolio in recent years, cutting down on some businesses, making some disposals. Would you say that the restructuring is mostly behind you now?
In terms of restructuring, I think it's behind us for nearly 3 years now since we exited Myanmar, merged and consolidated our leadership position in Indonesia. But the reshaping of Ooredoo from a traditional telco into a digital infrastructure company, this is still on tracks and going on. As you know, we carved out our data center business a couple of years ago, Syntis, which its EBITDA has grown by 141% this year. We've also just announced inorganic growth with the acquisition of Q Data, an additional 12.5 megawatts in Qatar. This consolidates our position as the leading data center provider in Qatar. We've carved out our fintech business with Ooredoo Money and Wallety, which is also growing very fast. This year was a record $7.2 billion of total transactions on our platform and a total market share of nearly 22.5% in terms of the remittance market. So our restructuring of our core telco portfolio is done. Future-proofing the business with these new silos in the infrastructure business is ongoing, and we're accelerating and deploying more CapEx into that.
So since you mentioned data centers, I'm just curious to see how big of domestic scale you're envisioning.
So we've announced a target of growing the Syntis platform by 2030 to 120 megawatt. When we started our journey, we were barely at 22 megawatts. We're already at 30 megawatts now. And we're probably sure that we'll exceed our target in terms of size, but also of speed quite consistently, because we're seeing a very strong demand pipeline. Not just in Qatar, we're seeing demand in our other footprints in Kuwait, in Tunisia, in Iraq. As you know, the region is a major hub, first for all the transit of data between Europe and Asia, but also the whole region is becoming a powerhouse in terms of the digital economy and AI. And this requires a lot of assets on the ground. We have the most diversified footprint in terms of geographic footprint, so that puts us in an ideal position to capture that growth.
Yeah, there are reports that came out not so long ago suggesting that Syria is also perhaps a geography of focus for you. Are you eyeing up a potential opportunity there?
We have a very strong balance sheet. As you know, we're at 0.4 times net debt to EBITDA. So that puts us in an exceptional position for any inorganic growth opportunities. We've been constantly on the lookout for acquisition or in our core business, telco, or within our new adjacencies, which is data center, fintech, and fiber connectivity. Despite that, we're extremely disciplined. Of course, our area of predilection is the MENA region as a whole, because this is where we have a very strong competitive angle. So we're looking at a number of opportunities. When they materialize and we have an official announcement, I'll be happy to be back here with you.
Okay, good stuff. Ooredoo Group CEO Aziz Aluthman Fakhroo, thank you so much for coming on our show today. We appreciate it. Now for a look at some of the other stories we're following today. Bloomberg has learned Abu Dhabi's MGX is in talks to provide hundreds of millions of dollars to Anthropic as part of a funding round that's set to raise a total of more than $20 billion. Sources say an announcement about the proposed investment is likely in the coming days, with no final decisions made and the size and structure of the investment subject to change. Egyptian inflation has slowed to its lowest level since September, with consumer price growth in urban areas at 11.9% in January. The slowing of inflation has been challenged by factors including International Monetary Fund-backed subsidy cuts. Inflation is down since hitting a record 38% in September 2023. And coming up, Valterra Platinum CEO says the PGM market deficit will continue to persist. More from our interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Zimbabwe's government has proposed constitutional changes that would extend President Emerson Mnangagwa's term until 2030. The bill would lengthen presidential and parliamentary terms from 5 to 7 years, postponing elections currently scheduled for 2028. Officials say the move is aimed at reducing election-related disruptions, enhancing policy continuity, and promoting economic stability. Nigeria plans to begin selling state-owned assets to private investors this year. Finance Minister Wale Irun says the government is identifying assets to offer and setting timelines for the sales. The plan is part of Nigeria's efforts to drive private investment after a series of reforms aimed at drawing capital to the country. And Zambia is set to begin talks with the IMF about a new economic program. However, a final deal will only be concluded after a general election in August. According to the finance minister, the IMF would like to negotiate with a government that has time to implement what has been negotiated. Valterra Platinum is striking an upbeat tone following its demerger from Anglo American, as higher platinum prices help support the company's outlook. In an interview with Bloomberg's Jennifer Zabazaja, the CEO Craig Miller says the platinum group metals market has been in a deficit and expects that supply shortfall to persist.
Yeah, so you're absolutely right. We implemented the demerger in the middle of last year, and I think it's fair to say it's gone really, really well. Not only in terms of how we've set the company up to be much more focused and more agile, but really concentrating on investing in the world-class assets that we have. We've also seen the benefits of the higher PGM prices, which is, we're really, we've been seeing for quite some time, and we've been saying the environment is supportive of those. So linked together with that, that certainly enabled us to, to enjoy the process since the demerger, and also importantly for us to really be focused around capital allocation and that discipline. And so, so far, as Valterra Platinum, it's been really, really good. And I think that'll the benefits of that you'll start to see when we release our results in just over 10 days' time.
What do you think the catalyst was, though, for some of the upswing in prices for PGM and platinum? Because prior to the demerger, we did see a period of prolonged rout for PGMs. Sure. What do you think sort of the catalyst was in 2025?
Yes, I think it's multifaceted, and some of those signposts we had sort of highlighted as part of the, our proposition, and when we were speaking to shareholders and potentially new shareholders, that the PGM market has structurally been in a deficit and will continue to be in a supply-demand deficit for a number of years. And that's on the back of increased demand for our product as the energy transition and the sort of the rollout of internal combustion engines was not necessarily going to be as dramatic as sort of the forecasts were. As you continue to see sort of industrial demand for PGMs, and then also relatively muted supply because of the price environment that had been around for a number of years. There had been an underinvestment in PGM supply, which has then sort of started to weigh on the market. And so when you started to have some of the supply disruptions which took place in 2025, and you also saw sort of some of the geopolitical events playing out, you see that there's not a great deal of PGM supply out there. And as a consequence of that, you've had the rise in prices. And I don't think those structural issues have necessarily gone away.
So much focus on mining and metals. Let's take a look at how broader markets are faring. The big event today is going to be the jobs data. It's delayed. It usually doesn't come out on a Wednesday, but it is coming out today because of the shutdown. So let's keep an eye out there for any surprises. Headline figure is expected to come in at 65,000. Unemployment rate to hold steady at 4.4%. So that is coming up. Today will be a big driver for markets. S&P futures and NASDAQ leaning towards positive. European markets trending sideways today, around flat. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.